All right. Well, hello, and thank you for the opportunity to speak with you guys today. So, my name is Ryan DeBouvier, and I have Michael Peterson and Taj Pollard with me here as well. And we're here on behalf of our team from Accounting 535, Principles of Accounting Information Systems, to present a case study focused on improving the accounts payable process at a company that we've created called Centrix Manufacturing Incorporated. So, a little bit about our presentation. Our presentation will walk you through the company's current accounts payable process, and we're going to highlight a couple of things, including control failures and risks that exist today, and propose a modernized solution. So essentially, we've designed this presentation with a boardroom lens in mind, focusing on various degrees of risk, operational efficiency, and compliance. So our ultimate goal is to show how strategic enhancements in systems and internal controls can help Centrix reduce financial exposure and build a more scalable, transparent process. So we'll begin by introducing Centrix business profile and walking you through its current accounts payable process. So our case study specifically, Centrix Manufacturing is a mid-sized auto parts manufacturer headquartered in the Midwest with annual revenue of approximately 120 million and over 500 employees. Well, despite its growth, the company has been plagued by inefficiencies in its accounts payable process. Specifically, the current AP system is a patchwork of manual tasks, paper documentation, and inconsistent internal controls that have not kept pace with the company's operational complexity. These weaknesses have resulted in processing delays, vendor dissatisfaction, and significant financial losses due to errors and duplicate payments. Under the existing process, purchase requisitions are submitted informally via email or paper, with purchase orders generally generated manually in the company's aging ERP system. But upon receipt of goods, warehouse personnel log deliveries on paper receiving forms, which are then forwarded to the AP team. Invoices are typically sent by vendors through email and printed by the AP clerk, who is responsible for matching the invoice to the PO and receiving documentation. A manual, error-prone three-way match. But once matched, invoices are then routed by hand for managerial approval before being entered into the ERP system. Payments are then processed weekly, often via printed checks with little oversight, unfortunately. There are, admittedly, several internal control weaknesses that are evident throughout our process. To begin with, there is an inadequate segregation of duties, with the same individual frequently responsible for entering invoices, performing matches, and initiating payments. The manual approval process lacks visibility and audit trails, increasing the risk of fraud or unauthorized transactions. Furthermore, the system has no mechanism to flag duplicate invoices or detect overpayments. A recent internal audit revealed that Centrix lost over $200,000 due to duplicate payments over the past 2 years and identified the accounts payable process as a high-risk area for financial misstatements and operational inefficiency. And given the volume of transactions, of significant transactions with over 1,200 invoices processed monthly, the reliance on manual processes is unsustainable and introduces unacceptable financial and compliance risk. The board and senior management have expressed concern about the company's ability to maintain vendor relationships and comply with internal control requirements under SOX Section 404. The broken AP process has become a bottleneck, hindering cash flow management and exposing the company to reputational and regulatory risks. So again, to highlight what we said in the prior slide about giving the general overview about the company background and the flaws within the AP process, we'll talk a little bit about it more here. So again, at Centrix, the accounts payable process is heavily manual and fragmented. Again, requisitions are submitted through informal channels, usually via email or paper, which creates inconsistency and poor tracking. Purchase orders are manually generated in an outdated ERP system, and there's no automation in how they're sent to vendors. When goods arrive, warehouse staff log deliveries on paper forms. These receiving documents are forwarded to AP where the clerk prints incoming invoices, then performs the manual three-way match using paper documents. And then once matched, invoices are routed, again by hand, for managerial approval before being entered into the ERP. And lastly, again, payments are made weekly using printed checks with very little systematic oversight or audit capability. This process lacks scalability, transparency, and internal controls. Let me go ahead and walk you through our current procure to pay process. Again, kind of just highlighting everything that I've already mentioned, but visually, of course. So this flow chart just outlines the interaction between four main departments, specifically the procurement department, warehouse, accounts payable, and then management. So to begin with the procurement team, who create a purchase order when goods or services are needed. This PO is then physically mailed to the vendor, a process that introduces time delays and lacks visibility. Well, once the vendor receives the PO, they fulfill the order and ship the goods. Well, simultaneously, they may send the invoice back to the company, often by email or mail. But when the goods arrive, however, the warehouse logs the receipt using paper-based receiving documentation, and this documentation is then forwarded to the accounts payable for processing. So in accounts payable, we perform what's known as the three-way match, as we have already discussed in the prior slides, comparing the PO, or the purchase orders, the vendor invoice, and the receiving documentation. And this essentially is a critical control to ensure that accuracy is made prior to payment. But as we've noted, if discrepancies arise during the three-way match, there is currently no defined error resolution process, which, unfortunately, and to our detriment, creates a risk of delays, payment errors, or duplicate payments. And lastly, we have the invoice processing. And in the event there are no errors, the invoice is then entered into the ERP system and routed to management for approval. Once approved, payment is processed and sent to the vendor.
While evaluating the current accounts payable process issues, we identified 6 main process and control issues and their potential risks. The accounts payable process at Centrix suffers from multiple critical weaknesses. Nearly every step, PO creation, invoice receipt, and three-way matching are manual. This not only increases the risk of human error, but also makes the process slow and inefficient. The warehouse logs incoming shipments on paper, and that information is manually passed to accounts payable. The accounts payable clerk then handles everything from printing emailed invoices to performing the three-way match and even initiating payments. This concentration of duties presents a serious segregation of duties issue. We recommend transforming Centrix's accounts payable process from a paper-heavy reactive workflow into a streamlined system-driven operation. On the process side, purchase requisitions should originate electronically, auto-generating purchase orders through the ERP. Goods received should be logged into the system by warehouse staff in real time, eliminating paper forms. Vendors should submit invoices electronically, either through a secure portal or using OCR technology. This allows the ERP to automatically execute the three-way match, reducing clerical errors and improving processing speed. To strengthen internal controls, we recommend implementing digital approval workflows with role-based access restrictions. No single individual should control invoice entry, matching, or payment approval. Finally, replacing printed checks with ACH transfers under dual authorization reduces the risk of fraud and provides a digital audit trail. ERP alerts and exception reports will give management visibility into accounts payable anomalies, ensuring compliance with SOX and internal policy.
Our proposed AP process reflects our recommendation to move away from a paper-heavy, reactive workflow into a streamlined, system-driven operation. Purchase requisitions originate electronically, auto-generating POs through the ERP. Vendors receive the PO electronically. Goods received should be logged into the system by warehouse staff in real time, eliminating any paper forms. Vendor invoices are then received electronically through a secure portal and stored within the ERP. We can now complete the three-way match through data within the ERP, reducing clerical errors and improving processing speed. To strengthen internal controls, we are also recommending implementing digital approval workflows with role-based access restrictions. As we close our presentation, we want to reiterate that Centrix's current accounts payable process presents both operational inefficiencies and serious internal control risks. Despite being a $120 million company, Centrix continues to rely on outdated and manual AP practices, including paper-based receiving forms, email-based invoice submissions, and printed checks. These practices not only slow down processing, but also create vulnerabilities. With over 1,200 invoices processed monthly, the current process is simply not scalable. It lacks automated checks, clear segregation of duties, and sufficient oversight. Factors that increase exposure to fraud, payment errors, and SOX 404 non-compliance. In response, we've outlined a comprehensive improvement plan. This includes implementing automated purchase requisitions, ERP-driven three-way matching, digital approval workflows, and segregation of duties across invoice entry, matching, and payment release. These changes are not just about efficiency, they're about restoring control, transparency, and trust in the company's financial processes. With this approach, Centrix will not only address its current pain points, but they will also lay the groundwork for long-term operational resilience and compliance. Thank you for your time and attention. We welcome your questions and look forward to your feedback.